When it comes to the topic of investing in crypto, we hear the same warnings over and over again. It's too risky, there's no security, the market is too volatile, or even isn't Bitcoin just used by criminals? The thing is, most of those statements are at least partly true, however, that doesn't make Bitcoin a bad place to put your money. As with all investments, there are risks, and there are benefits, and it's about weighing up both of these together, making sure that you're making the move that's right for you. Today, we'll break down the pros and cons of investing in Bitcoin so you can decide if it's the right investment strategy for you. So, stop listening to the naysayers and those on the hype train and let us help you make up your own mind. This is why Bitcoin investment isn't as scary as you think. Volatility. The first thing you might hear is about how volatile Bitcoin typically is. Bitcoin's volatility is commonly assessed through the standard deviation of its daily returns over 30-day and 60-day periods. Compared to traditional assets like gold and fiat currencies, Bitcoin historically exhibits higher volatility. Gold typically has an average volatility of around 1.2%, while major currencies range from 0.5 to 1%. The Bitcoin Volatility Index reveals a much higher volatility, with recent estimates at 3.51% and 3.48% for 30-day and 60-day periods, respectively. So you can see why people might feel a little cold towards the idea of investing in Bitcoin over traditional gold or Forex investments. This is attributed to its status as a pretty new asset class, coupled with the fact that we're still in the early days of the cryptocurrency market. Factors like investor sentiment, economic policy uncertainties as the world tries to work out how to regulate crypto, and potential market manipulation are identified as potential drivers behind the volatility. This means Bitcoin is regarded as a risky asset prone to significant fluctuations over short time frames. However, while the wild swings in Bitcoin's value might make some traditional finance types break out in a cold sweat, it's like a thrill-chasing exercise for others, especially the younger crowd who are no strangers to fast-paced digital adventures. Think about it this way. For many younger investors, traditional finance can seem pretty slow and boring. It's all about paperwork, long waits, and complicated processes. But Bitcoin, with its flashy charts, real-time updates, and the potential for massive gains or losses in the blink of an eye is something much more exciting. It's almost like playing a game. Sometimes you win and sometimes you lose, but if you enjoy playing, it isn't the winning that counts. Sure, with Bitcoin investments, real money is at stake, but if you're looking to start playing markets in short term, you understand the risks and don't put more money than you can afford to lose. It can be a thrilling experience. In the longer term, some investors and experts have predicted Bitcoin's price could reach as high as $200,000 over the next decade, which is reassuring when it comes to the potential for significant returns if you're happy to take your time. If you head over to one of the many communities dedicated to Bitcoin investments, you'll probably find a great tip. Occasionally investing in Bitcoin a bit at a time, rather than trying to time the market with a big investment, can stop issues with bad timing and volatility, as you aren't putting all your eggs in one basket. Then there's the issue of the lack of, or complexities with, regulation. Lack of regulation. Because Bitcoin is decentralized, many investment experts would point to the lack of regulation and uncertainty around the future of Bitcoin as another reason to keep your cash in your pocket. To be honest, working out what the situation is with the regulation of cryptocurrencies is a little like walking through a maze blindfolded. It's confusing, ever-changing, and full of potential pitfalls for investors, but again, it's about understanding things for yourself and weighing up the risks before you dive in headfirst. First off, there's no one-size-fits-all approach when it comes to regulations. Different countries are doing their own thing, with some embracing cryptocurrencies, others slamming the door shut, and most stuck firmly somewhere in between. The lack of a common global strategy to manage crypto leaves investors scratching their heads, unsure of what rules they're playing by. It isn't just a matter of setting regulations once and calling it a day either. It's an ongoing saga of debates, discussions, and policy flip-flops. Take the US, for example. Regulators, crypto bigwigs, and the courts are locked in a constant tug of war over who gets to call the shots. This can catch investors off guard, sending shockwaves through the market and causing some of that volatility we spoke about earlier. Then there's the ever-looming threat of crackdowns and restrictions. Countries like China have slammed the brakes on all things crypto, from trading to mining. The fear of similar crackdowns elsewhere is a dark cloud hanging over the crypto market. Even in regions where regulatory efforts are underway, like the European Union, it's far from smooth sailing. The lack of of harmony among countries means investors are juggling a patchwork of rules and requirements, adding yet another layer of complexity to an already murky landscape. It isn't all doom and gloom though. Huge financial institutions like PayPal and Square have recently begun to embrace and accept Bitcoin. This shows its increasing acceptance and that people are beginning to see it as a legitimate currency. This alone should be enough to provide some reassurance about the stability and permanence of Bitcoin. Things are moving in the right direction. In short, it's getting more widely accepted around the world, and countries are working to only make that transition smoother, even if it's a complex issue. The underlying blockchain tech is a major reason behind this. This technology offers practical applications beyond currency, which is why governments are trying their best to understand and use it, again inspiring confidence in Bitcoin's long-term viability and stability in the long term. Whilst Bitcoin has seen rapid price increases since its inception, we have to remember that the cryptocurrency market is still pretty new, especially compared to traditional financial markets, and things should start to calm down as the world gets used to this new form of digital currency. Just because things are crazy right now doesn't mean they'll always be that way. What about the lack of security though? Security and the potential for manipulation of the market. There are, of course, security risks like the loss of private keys, hacking incidents, or technical glitches. Unlike traditional financial products, Bitcoin lacks the safety nets of guarantees or insurance against theft or accidental loss, making potential investors wary of committing funds. Not only that, the nature of the cryptocurrency market leaves it susceptible to manipulation by influential entities, including individuals, organizations, or exchanges. While some view Bitcoin as an exciting opportunity for potential gains, others perceive it as a risky asset rather than a true stable investment or currency. This perception can discourage certain investors from participating in the market, as they may prefer assets with more predictable and less volatile value trajectories. While concerns about security risks, market manipulation, and Bitcoin's speculative nature are valid, it's essential to consider the potential counterpoints. First off, we have the amount of innovation potential that Bitcoin represents. Despite its security flaws, Bitcoin's underlying technology, blockchain, offers revolutionary possibilities for decentralized and transparent transactions. This innovation could disrupt traditional financial systems, providing individuals with greater control over their finances and transactions, and actually become more secure than traditional currencies. The growing adoption of Bitcoin adds some credibility to it as an investment asset, rather than something speculative. Major companies and financial institutions entering the cryptocurrency space indicate a shift towards mainstream acceptance. This trend may lead to improved regulatory frameworks and enhanced security measures, mitigating concerns about security risks and market manipulation. Bitcoin's unique properties as a non-correlated asset present further benefits to investors. While traditional financial products may offer guarantees and protections, they also come with their own sets and risks, and the potential for market downturns. Bitcoin's independent valuation dynamics could serve as a hedge against such risks, enhancing overall portfolio resilience. Last of all, a common misconception about Bitcoin's use in criminal activities. Criminal uses. Bitcoin's potential to be used in criminal endeavors does present several concerns, which add to a negative perception of it as a potential investment. It's pretty much anonymous, allowing transactions to be recorded on a public blockchain without directly leading back to individuals. This has led to fears that Bitcoin could be exploited for illegal purposes, and evidence shows that it is widely adopted as a payment method on the dark web because it's so hard to trace the source and destination of funds. There are also concerns with Bitcoin's role in money laundering and financing criminal activities like drug trafficking and terrorism. It's almost impossible for authorities to track down those putting illegally obtained cash into Bitcoin, allowing them to exchange back to cash without a trace. This is what led some governments and regulatory bodies to crack down on Bitcoin and other cryptocurrencies. For instance, China has implemented bans on cryptocurrency trading and mining due to concerns about financial stability, but also because of its adoption as a currency used used in criminal activities. In association of Bitcoin with criminal undertakings, despite not representing the majority of its use cases, has created a lot of negative opinions. This can discourage the mainstream adoption and investment, as individuals and institutions may hesitate to engage with a financial system perceived to be linked to illegal activities. While it's undeniable that Bitcoin's anonymous nature and decentralized structure led to real concerns, it's essential to consider several counterpoints. Firstly, Bitcoin's transparency can actually aid in law enforcement efforts. While transactions are anonymous, they're all recorded on a public blockchain, meaning authorities can see a record of all transactions. This transparency can help forensic analysis of transactions and aid with police investigations, actually making it easier to trace illegal activities compared to traditional cash transactions. It's also worth noting that the vast majority of Bitcoin transactions are legitimate and used for lawful purposes. Studies have shown that illicit activities make up just a small fraction of Bitcoin transactions. Painting Bitcoin just as a tool for criminals is pretty ignorant of its much wider utility as a decentralized currency and store of real value. Regulatory crackdowns in Bitcoin may also hinder legitimate innovation and economic growth. Heavy-handed regulations could stifle technological advancements and drive cryptocurrency-related activities underground, making it more challenging for law enforcement to monitor and regulate effectively. Lastly, the negative stigma surrounding Bitcoin's association with criminal activities will start to lessen over time as cryptocurrency as a concept becomes more widely adopted and integrated into mainstream financial systems. As governments and regulatory bodies develop better ways to manage cryptocurrencies, the association with illegal activities will begin to fade away. So, as you can see, there's a good counterpoint to almost everything you get told about why Bitcoin shouldn't be on your list of investment options. There are risks, and crypto in general is still very much a wild west when it comes to investment. We don't really know exactly what the future holds, but if the value of Bitcoin really can reach as much as $200,000, this can be a really viable long-term investment option. Or if you want to try and play the fluctuating market, you can do so, but weighing up the risks and making sure you understand that you might lose money in the short term means that this can be an exciting and enjoyable way to invest as an alternative things to Forex or the stock market. The most important thing is to make sure you get the facts and make the decision that's right for you, not just read every success and failure story out there on the internet to decide for you. Thanks for watching. If you learned anything from today's video, hit that like button to let me know, and remember to subscribe and click the notification bell so you don't miss my next upload, and I'll see you in the next one.